Everyone, welcome back to Crypto Brain, and before we dive into today's market breakdown, make sure you subscribe to the channel, because here we analyze the crypto markets using logic, market structure and liquidity behavior, rather than hype and DeFi. You want to stay ahead of developing narratives inside the digital asset space. This is exactly where you want to be. Now, today's analysis focuses on something that has recently started capturing the attention of traders across the market, and it revolves around the token entity cryptocurrency SPX6900. An SPX6900G community surrounding a potential momentum expansion that could push the asset toward the psychologically important $1 level, and when markets begin approaching major psychological price targets, traders usually start paying extremely close attention because those levels often act as powerful magnets for liquidity. In financial markets, psychology plays a much larger role than most people realize, because round numbers, such as $1, $50 or $100, often become areas where large amounts of orders begin clustering, both from buyers expecting things from traders attempting to take profits, which means the journey toward those levels usually becomes extremely volatile and highly interesting to analyze. Over the last several trading sessions, analysts have started observing changes in market behavior surrounding SPX6900. And the first signal that stands out clearly is the behavior of trading volume, because volume represents participation and participation represents capital. And whenever we begin see new expanding volume alongside stabilizing price action, it often signals that new liquidity may be quietly entering the market. Retail traders typically react and the move has already begun. But whales operate using a completely different strategy. Large investors usually position themselves during consolidation phases, when price movement appears calm and when the majority of the market is not paying attention, and this behavior allows them to accumulate positions quietly without causing immediate price explosions. When whales accumulate, they rarely execute a single massive order. Instead, they distribute their buying activity across multiple smaller transactions over time, allowing them to absorb available supply gradually. And when enough supply is absorbed, something extremely important begins forming beneath the market's surface, what professional traders refer to as a liquidity base. Liquidity bases are critical in market structure because once the majority of selling pressure has been absorbed, the market becomes far more sensitive to incoming demand, meaning that even moderate buying pressure can begin pushing the price upward much faster than before. And this is often the stage where momentum cycles begin developing. Now, if we analyze the broader narrative currently forming around SPX6900, we begin seeing several elements aligning simultaneously. The first element is increasing market attention. This element is the appearance of rising participation visible through trading volume. And the third element is the growing discussion about the potential for a momentum-driven pump toward the $1 psychological level. The concept of a pump thesis in financial markets is not simply about sudden hype-driven spikes, but rather about the alignment of structural forces inside the market structure, including liquidity, availability, participation growth, and narrative expansion. And when these three forces begin aligning simultaneously, markets often transition from quiet consolidation into rapid discovery phases. Another important factor to consider is market capitalization logic, because the amount of capital required to move an asset depends heavily on the overall market cap of that asset, and compared with large established cryptocurrencies, smaller market cap tokens can react far more aggressively when liquidity begins centering the ecosystem. In practical terms, this means that if SPX6900 begins attracting additional capital, while market participation continues increasing, the percentage movement required to approach the $1 level becomes far more achievable than many traders initially expect. And this is why early-stage momentum cycles in crypto often appear extremely explosive once the broader market begins recognizing the narrative. Historically, many crypto assets that experience powerful rallies followed a similar structural pattern. The first stage involves quiet accumulation, where early participants position themselves. The second stage involves narrative expansion, where more traders begin noticing the opportunity. And the third stage involves liquidity acceleration, where large amounts of capital begin flowing into the market, driving aggressive price movement. Right now, the structure surrounding SPX6900 appears to be moving somewhere between the early accumulation phase and the narrative expansion phase, which is exactly the period where experienced analysts usually begin watching markets extremely carefully. However, professional traders always approach these situations with discipline, because volatility works in both directions. While strong upward movements can appear quickly, Corrections can also occur just as fast, which is why the most successful analysts focus on liquidity behavior and structural signals rather than emotional excitement. The most intelligent strategy during developing momentum narratives is observation, watching how volume behaves, monitoring how price reacts near resistance levels, and paying attention to whether large holders continue accumulating positions, because those are signals usually reveal whether the market is genuinely preparing for a larger expansion phase. If participation continues increasing, and if the liquidity base beneath the market continues strengthening the probability of a stronger upward movement toward major psychological level, this gradually becomes higher, and once public attention fully shifts toward an asset, momentum can accelerate extremely quickly. Historically, the most explosive moves in the crypto market rarely begin when everyone is already paying attention. They usually begin quietly, while only a small group of analysts recognize the structural signals developing beneath the surface. And by the time the majority of the market notices what is happening, a significant portion of the move has already taken place. For now, the smartest approach remains analytical observation and monitoring trading activity, evaluating participation growth, and paying attention to whether the current structure continues evolving in a bullish direction, because those are the indicators that usually appear before major expansions in market value. And if the structure currently forming continues developing in the same direction, the coming weeks could become extremely interesting for the market surrounding entity cryptocurrency, SPX6900. The SPX6900, you found this analysis valuable. Make sure you subscribe to the channel for more professional crypto breakdowns. Stay analytical, stay informed, and remember, in crypto, the biggest opportunities often begin long before the majority of the market even realizes what is happening.